Welcome. We are diving straight into an analysis report on DataVault AI, that's ticker DVLT.
Yep.
It's all about today's 8% spike, which seems to be driven by two pretty big catalysts.
The Jeremy Roenick partnership and this new meme coin dividend strategy.
Exactly.
So let's get right into it. The goal here is to refine this material, really maximize its impact for, everyone from the retail trader to the more institutional folks.
Absolutely. And the report does a great job laying out these two drivers. You've got the long-term utility play with Roenick and the NIL exchange.
Right, the tangible AI monetization path.
And then on the other hand, you have this pure short-term momentum from the Dreambowl meme coin.
Yeah, and that's where I think we can start. The analysis report covers genuinely exciting ground, but I'd argue the predetermined high-energy bullish speculative tone, it risks undermining the actual strength of the fundamental analysis being presented.
Okay, but let me push back on that just a little.
Sure.
A stock is up 8% in one day. You've got an NHL legend. You've got a crypto dividend. Isn't some of that hype, necessary to capture the energy of the moment?
That's a fair point. You do want to capture engagement. The weakness, though, is in the execution.
Okay.
By immediately leaning into phrases like, "this is wild," or calling that support level a massive buy zone, the analysis, it risks losing credibility with more sophisticated readers.
I see.
That really speculative tone just clashes with the sobering financial facts that are presented later. You're sort of mixing the signal with the noise right from the start.
So the excitement is almost polluting the objectivity?
You lose the trust of that more discerning reader. How can they fix that? How do you structure the excitement without losing the rigor?
The suggestion here is to really re-engineer the structure. Present the objective facts and the logic neutrally first.
Just the facts.
Just the facts. And then you explicitly reserve that speculative assessment for, say, the bull case section. That separation is just crucial for credibility.
That sounds like a small change, but I can see how it would have a huge impact. It's about organizing the flow of information to build trust.
Exactly.
Can you give us a concrete example? Like, what about that support level you mentioned? For sure. So instead of just slapping a massive buy zone label on it right away,
right,
you report the technical finding first. You state that the $1.20 to $1.25 area served as critical algorithmic support.
Algorithmic support. That already sounds more sophisticated.
It is. It signals this isn't just a random line on a chart. It suggests structured, maybe even institutional, buying. You state the fact, the algorithmic accumulation, and then you move to the interpretation.
So you explain the why behind the support before you even suggest it's a place to buy.
Precisely. And you do the same thing with the meme coin. First, just explain the mechanics, the distribution, the scarcity squeeze effect, all of that. Then you can add the more speculative questions about AI stocks and meme coins converging. Sequencing it that way just elevates the whole analysis report.
That makes a ton of sense. It feels much more robust. Okay, let's pivot to the financial context, because that's the anchor for a story like this.
It has to be.
The report flags the key numbers: a market cap around $396 million, a price to sales that is, extremely high at 60x.
60, yeah.
And the company is burning cash, a $67 million net loss trailing 12 months.
And those numbers, they're really the heart of the risk. So the analysis report needs to more aggressively integrate those challenging metrics to frame the absolute urgency of these new revenue streams.
I agree with that. Right now it feels a little compartmentalized, like it's a checklist item. But 60 times sales for a company this size that's losing this much money, what does that multiple even mean in context?
It means the stock is priced for exponential perfection.
Right.
A 60x PS is usually for, a pure SaaS company with 90% gross margins and a clear path to hundreds of millions in revenue.
Which this is not, at least not yet.
Not yet. So for DVLT, the market is basically saying the clock is ticking, loudly.
So the weakness is that the report treats the high valuation and cash burn almost like a footnote. It's just financial context, instead of the critical pressure that defines what success has to look like for this Roenick partnership.
Exactly. That separation just minimizes the almost existential risk here. The stock price is a pure growth premium, and that premium needs justification like yesterday.
Okay, so what's the suggestion?
You need to use that demanding valuation as the lens to view the news.
So you frame the Roenick deal not just as a promising venture, but as the fire extinguisher for that $67 million cash burn.
Precisely. You frame it as an existential necessity. It has to validate that growth story, and fast.
That really raises the stakes of the whole narrative.
It does, because if the NIL exchange just shows moderate growth, that stock could easily trade back down to, what, a 5 or 10x PS? And that's a catastrophic loss from these levels.
That's a huge analytical jump to make. How can the writer make that connection more explicit? They can't just say it has to be successful.
No, you have to quantify it.
Right.
When discussing the NIL exchange, the report should state explicitly that for a company at 60 XPS, success has to mean clear, verifiable metrics. To even start to negate that cash burn, the NIL division probably needs an annualized run rate of, I don't know, tens of millions of dollars within 12 to 18 months.
Not just a few press releases about athlete signups.
Exactly. It gives the reader a real benchmark.
Okay.
The report should even pose the question directly. What specific financial progress, maybe like a projected Q1 2026 NIL revenue number, what does that need to be to sustain these $1.50 plus levels? That makes the analysis an indispensable tool.
Okay, shifting gears a bit, let's talk about the coherence of these two main drivers.
Yeah, this is a big one.
They're very different. You have the serious AI utility with Ronik and data monetization.
Long-term value creation.
And then you have this pure, short-term retail hype with the meme coin dividend. It's designed for a scarcity squeeze until, what, December 24th.
And the analysis report, it sort of overlooks the critical strategic tension here and the potential reputational risk of doing both of these things at the same time.
I can see that. They send very mixed messages. If I'm an institutional investor trying to understand their core AI business, that meme coin strategy just seems like a huge distraction.
It is, and the weakness is that the report treats both catalysts as just unequivocally positive.
Yeah.
But a sophisticated user is going to question that. Does using a speculative crypto dividend to, let's be honest, manipulate short-term buying pressure, does that suggest a lack of confidence in the core AI business to grow organically?
It creates a credibility gap.
Instantly.
But couldn't you argue that the meme coin is actually a smart, short-term tool to address that ticking clock we just talked about?
How so?
Well, the 60 XPS, the cash burn, if they need a liquidity bridge to fund the Ronik platform, and this is the cheapest way to get that liquidity, isn't that just clever financial engineering?
It might be clever, but it's really high-risk financial engineering. And the analysis has to address that trade-off. It's about identity. Is DataVault AI a cutting-edge data company, or is it a company that's managing crypto logistics? The issue is the potential dilution of that high-value AI story. If management is spending all this time on a volatile crypto strategy, what does that say about their commitment to the hard, patient work of building a real AI platform?
That is a really powerful point, and it would definitely strengthen the bear case section.
It has to be in there.
So the analysis must dedicate a specific point to address this dual catalyst credibility risk.
Absolutely. The suggestion is to integrate a challenging question. Something that explicitly explores whether the short-term hype play risks undermining the long-term, high-value AI initiative. To ignore that tension makes the whole analysis report feel a bit incomplete, a bit naive.
Okay, so what's a concrete example? How can the listener illustrate that risk, especially when they're talking about what happens after the dividend?
The report has to bolster the bear case with the specific counterargument about that December 24th cutoff.
Right.
Ask what happens if the meme coin proves to be worthless, or if the distribution is just, poorly handled.
The post-distribution dump.
The dump could not only push the stock right back towards that $1 support level, it could fundamentally erode confidence in the company's entire strategic focus.
Because the headline that sticks won't be about Ronik or AI.
No.
It'll be about the failed crypto gimmick.
Precisely. And that failure risks completely overshadowing the long-term utility message. It suggests management is focused on, fleeting gimmicks instead of sober long-term execution. And putting that discussion in the report shows a really complete, nuanced understanding. It's what separates a good report from a truly excellent one.
Okay, this has been incredibly helpful. Very actionable suggestions that are all focused on really boosting the report's credibility.